Hello again, and welcome to our look at the Wednesday, September 17th trading session. In front of you, I have the economic calendar, and with most of the announcements earlier in the day coming out of Great Britain, a lot of these are going to be very low impact. Even the employment numbers, which typically, the claimant count change, which typically would move the market quite significantly, not so much, because we have the Scottish referendum vote tomorrow. So obviously that is going to be the focus in Europe. Well, we have, the United Kingdom. We do have the CPI coming out of Europe, expected to be 0.3%. That could move the DAX, that could move European indices in general, could move the euro, which already looks like it's getting a little bit of a boost. Most of the action for the day, truthfully, is going to be later as the Americans come online. We have two major things that we are watching. We like core CPI month over month. 0.2% is anticipated, and that, of course, could move the stock markets in America, such as the NASDAQ, the S&P 500, which is our favorite one at the moment, or perhaps the Dow Jones. Later in the day, though, we have the FOMC statement, the Fed funds rate, the FOMC statement, etc. No change expected in the target rate, but the statement will be paid close attention to for hints as to whether or not they will be tightening sooner or later. People are starting to think that perhaps the Federal Reserve is going to tighten their monetary policy sooner, which of course would have a drastic effect on the US dollar in general. Looking at the S&P 500, you can see that we certainly have had a pretty decent day during the day on Tuesday as we slammed back into the 2000 level. Right now, we look at this market as one that's basically consolidating between about 1980 or so and 2010. So we think that that's where we're heading next, given enough time. And those numbers coming out of America could, and the statement could, in fact, push this market higher. A break above 2010 would have us buying calls for longer-term trades. In the short term, though, we think that any pullback probably invites call buying from the shorter-term perspective. Looking at the euro dollar, you can see that we tried to get above 130. We are struggling a bit. Not sure whether or not we're going to make it, but quite frankly, this is a market that we believe will ultimately break out above 130 and probably look for about 132. A lot of moving parts right now, though, so we need to see a daily close above there. And if we get it, then we're willing to buy calls. Selling or buying puts at this point in time might be a bit difficult just because of all of the negativity that we've seen recently. The light sweet crude market rose a bit during the course of the session on Tuesday, but we still think there's a bit of a ceiling at the 96.00 level. So that being the case, we think 95 will offer a little bit of resistance, but the round handle here at 96 is probably about as high as we can get before sellers step back in. If that's the case, we have absolutely no issue whatsoever in buying puts closer to 96 region if we show signs of falling apart there. Finally, looking at the British pound, you can see that we've slammed in the 1.63 level. Probably a bit much for the bulls to take out at this point in time before the announcement. It's likely that we will continue to see a bit of bouncing back and forth here. If we can get above this hammer here, then we think that people will start to front run the Scottish vote, perhaps trying to get ahead of a yes vote out of Scotland to stay within the Union. And with that, we have looked at the Wednesday, September 17th trading session.